Okay, joining us now is a second kind of appearance from ChaseTaylor from Pinecone Macro. I got him on because he's feeling the pain from his positions, just like me. Chase, good to have you on, buddy.
It's great to be on. Yeah, not the funnest day out there today.
No, it's not, is it? We were just kind of laughing about it because Jared and Patrick were having their victory lap from all their kind of long bond positions, and I think we're a little bit more inclined to be on the short side of it. And yet the bond market's screaming in our face. What do you think's happening here? What's your interpretation of the what's kind of coming down with Powell and Trump?
Yeah, so I thought yesterday went okay for bonds considering everything that happened. So I actually wasn't feeling too bad about being short. But then obviously today with the tariff bond that kind of just blew everything out of the water. I actually got stopped out of everything I was doing in futures, bond wise, and I've been a dollar bull for a long time and was long against a few pairs. So those really saved me from just getting annihilated today. But I know I've seen a lot of people speculating that this is just, a big Trump ploy to get the Fed to do his bidding. And I'm not saying that's completely, out of bounds, but I don't buy into it as much as others.
So you think that this is actually an escalation that's going to last and that is serious that we should be taking as something that's going to stick? Is that what you're thinking?
I don't even know if I think it's going to stick. I just don't think the timing was quite as, as conspiratorial as everyone thinks that, it's just because Powell didn't cut 50 basis points. Because the reality was, his team came in and briefed him on the trip to China and how that went. And then right after that, he decided to do this. I will say, though, I never really
I like the conspiracy
he would go
theory
there for this. Yeah, no, it's not like it doesn't make sense. I see why people think that it's probably convenient for Trump both ways. But
right, I would agree with you there, Chase. But you're right that the reality is that they just got back, so he would have just been briefed, and he's like, "Okay, screw you. We're gonna do this. We're gonna pick it up a notch."
Right.
Yeah. Here's a thought I have for you, Chase. You mentioned you're a dollar bull. I'm actually become the other way. I'm a little bit of a dollar bear. One of the things that I worry about is that Trump is going to figure out that he's actually can tell the Treasury to sell dollars. What is your thinking? Why are you a dollar bull, and are you worried about Trump maybe coming in and actually using his power to intervene in the currency market?
Yeah, I think anyone that's bullish has to really keep an eye on that. From everything I've read, though, the Treasury's actual firepower to do anything, at least as it stands right now, just is limited. There's not that much they can do. Not enough to move a market that big. So I do worry about it from just a narrative standpoint, a sentiment standpoint, but not.
Why don't you share with us that? So you've read, and there's a limited amount that they can sell. Is that what you're saying?
Yeah, just kind of if you just read through, and I can't remember verbatim, but like the essential tool set they have that they use to actually devalue is pretty limited. They would, from my understanding, there'd have to be some statutory changes, which there's the new bill in Congress, so maybe something does come down from the government, but
I thought that they could go in.
The number it was like a few $1 billion that they would
right. So like the reality. So they can go sell like a certain amount of dollars, and then they would actually have to go change the law. Is that what you're saying? And therefore, that few billion won't be enough to actually move the market. Is that kind of your argument?
Yeah.
So you're not that worried about it?
Exactly. And one of the things that, and honestly, the dollar worries me just in general, even though I've been bullish, it's worrisome because it has refused to go down, and it's had, a million reasons to go down lately. You look at, the debt ceiling and the Treasury running down their cash balance, and that really didn't even move the dollar. And then, as soon as they kind of got the debt ceiling situation resolved, I mean, it just took off, and right in the face of rate cuts and ending QT, like all the things that dollar bulls or dollar bears were saying we're going to kill the dollar, they've kind of all come to pass, and the dollar still, it's made new highs yesterday and did it again today before popping back down.
So Chase, I have to ask you though, how much do you think it has to play with the late cycle dynamics, which is that traditionally in the past, when we've gone through a business cycle and the world goes to shit and then we go into a recession, that the safe haven trade is to go into the dollar. And with the global economic slowdown, I mean, there's headlines like that we're already in an earnings corporate earnings recession. What we're already seeing a manufacturing recession globally, and everyone sees the writing on the wall. They're using the dollar as a safe haven. I mean, is that really maybe the catalyst? What's happening here is just that everyone's looking at history and saying there's no better place to be at this stage in the cycle.
Yeah, I definitely think that adds to it. And a lot of times, if a global cycle is kind of led down by China the way this one, in my opinion, has been, that tends to lead to even more dollar outperformance than when it's otherwise. So yeah, as long as China's kind of sitting back and not really stimulating much, the rest of the global economy comes down. Everyone will blame all that on trade, but I think most of it's just the basic business cycle of China and the fact that they haven't, just poured stimulus everywhere. But yeah, you know, just getting a normal cyclical slowdown domestically and globally, both, I think would lead to inflows into the dollar.
Yeah.
So I
So do you
think that's
think
a
do
big
you
part of it.
worry about this getting a lot worse, Chase? Like, are you worried about a global economic on Real Vision we're in recession watch, and there's like 9 guys on Real Vision talking about all the different recession chances. And listen, maybe they're right, but I just kind of, to me, I worry whenever I see that many people arguing they're due for a recession, that the reality is that very few times is that actually predicted in advance.
Right.
What is your thoughts there? Like, where do you see the global economy headed?
So I don't think it's bottom yet. I think there's more weak data to come, specifically in the U.S. Like I don't think it's bottom quite yet. But at the same time, my thought process for the last say 3 months has been, we're not going to go into a recession, and all these, we're going to cut 100 150 basis points predictions that everyone's made, and everyone's huddling up in euro dollars. I've thought that was wrong. I've thought we're going to get one, maybe two cuts, and at worst we're going to get a very shallow, very quick recession. But I will say, watching the dollar move higher the way it did yesterday, and in the face of a lot of reasons for it to go down, it's starting to make me think the dollar could be what makes this whole thing worse, and what maybe does tip us over into a recession, especially with the trade war getting a little worse. Even though I don't think the trade war in actuality is as bad as everyone fears, that doesn't mean it won't push over sentiment and mess with business confidence. And you could argue the U.S. consumer is kind of holding the whole world up at the moment, and if they kind of fall apart, then yeah, we'll have a lot bigger problem than those of us that have kind of argued for maybe one or two cuts only have been
So,
thinking.
so you think there's still more pain to come in Europe and in China? Like we're not at the trough yet in terms of the bottom.
And as far as like a lot of like manufacturing and survey data, like I think some of that still has a ways to go. But if, you look at the M1 chart in China, and it looks like it could have bottomed. Some of the leading indicators out of Europe actually look decent. So, and even in the U.S., there's some leading data a little bit further out that looks like it, could be picking up a little bit. So there's actually, to me, a good bit of red meat out there for people looking for a bottom in the third quarter, maybe fourth quarter, and then this gets ripping higher. So if Trump gets another rate cut, QT is over. If the labor market's still holding on reasonably strong in 6 months or 4 months, whatever from now, you just cut really hard into a pretty tight economy. I think that there's the opportunity for the Fed to make a policy mistake in either direction right now, and that's something I don't think people on either side appreciate. Is we're kind of like on a delicate balance where the Fed could go too loose or too tight, in the next 6 months, because everything's kind of weird right now. The reaction function isn't what it usually is. They're having to look, more to the global economy, more to the dollar, and more to, trying to maintain their credibility on 2% inflation. So they're kind of in uncharted territory. They're used to looking at the unemployment rate and inflation. That's about it. Right now, they're kind of having to juggle politics and a trade war. So the room for them to make a mistake in either direction is significant.
And what do you think the best way to express that kind of uncertainty is?
Well,
like in terms of from a financial perspective, in terms of a trade.
Yeah, so I thought being short bonds was going to be a decent way to do it until about today.
Chase, man, you got to hang tough, buddy. You got to hang tough.
Oh, no.
Look,
you know what? Come on. A good trader knows when to walk away, Kev.
I had my top strike, my stop strike going into yesterday for that reason, and barely survived. And then it started looking a little better, and then today the tape bomb just blew everything up. But I was happy that my stops were tightened up after today. That's for sure.
So what's your favorite way going forward? Like, what are you looking at? What do you think might be a way to express, like, if what you think is correct, that there is more risk that the economy comes out of this quicker than we expect, and the inflation guys the recession guys are wrong. What is the best kind of risk reward trade out there that you see?
Yeah, I think. You and I have talked about tips in the past. I talked about it last time I was on the show. I still think tips are a good place because, last time I was on the show, I said, if that inflation would surprise higher, which we're not really getting, but I still thought the economy would slow down. So at least, you were in fixed income, it would get some love there. So I still think that can work. And if, we stabilize in the next couple of weeks, I really think getting short treasuries again could work, but you have to wait until the price action tells you to do that. But at the same time, if the Fed is loosening really hard and it turns out everyone's wrong, I mean, I don't see why just owning U.S. equities isn't going to work out, especially if the dollar keeps moving higher and really, puts a lot of downward pressure on the rest of the world.
Right. So the blow off top that we're looking at that we've been talking about.
Yeah, absolutely. I mean, you would have the liquidity conditions, the capital flows conditions, all kind of set there, and if especially if fixed income starts to back up, people might get nervous, and just start moving into equities.
Chase, okay, so stop for a second, though, because with S&P's first reaction for 48 hours or the last couple trading sessions here has been wiping out about, let's round it to 70 S&P points in very short order. And sure. Do you think, though, that we first go through some sort of a more meaningful market correction before that kind of a scenario emerges? Or do you think that this is just going to be a quick little blip in the radar and then it's back to the upside?
Yeah, so at the moment, I could easily see it being a little bit more serious correction than it is currently, just because, I think the market's able to digest stuff when it comes a little bit at a time, but a lot got thrown on the market in the last couple of days. You have, the Fed chair talking about mid-cycle, and then Trump's really upping the ante on the trade war. North Korea's launching more missiles. It's been a crazy couple of days, so I think you might have to get some digestion. The VIX is still under 20. You might need to see the VIX pop up near 30 or something. Get money flowing back out. I was long stocks until recently, but you start looking at fund managers all started piling back in, and everyone got optimistic again. And being a good contrarian, that's when I stepped aside. But now if everyone starts running for the hills again, that's when you start looking for a good level to get back in.
Well, not only that, with bonds rallying so hard, there's going to be Tina's going to be back.
Absolutely.
I know that's she's not very nice, and and she kind of screams at your house late at night and stuff. But Tina is real, and she's there, and there is no alternative.
Oh, come on!
And in our upside down world, that's where you have to go for yield. So
the short end of the curve though is all about Powell. Tina's going to be there for short-term deposits. You might lose a little bit on the longer-term bonds, but come on, Tina's going to be there if you want to go to cash.
Yeah, Tina, I don't like Tina. I like the stock market. Hey, I will say one thing, Chase. I might have goochered your trade. I added to my break-evens today. I bought them. I bought the 30s.
Get out now.
Yeah, you should. You should go. You should be going and telling it. I just looked at this thing, and I think to myself that the reality is that Powell, although he misspoke in terms of indicating his belief that it was going to be a mid spike, kind of just a correction. He actually doesn't. He's not. He didn't commit to that, and I think the market is overreacting to that because I think that as the data comes out, and listen, that guy should just stop giving press conferences because I think now he is 10 for 12 that have gone down in terms of the stock market, and honestly, like he is terrible. He just. He should take some lessons from Greenspan, who says, if you understand what I said, then I must have misspoke or something. I can't remember what his line was. It was something like that. But he says things in kind of plain English and tells people what he's thinking, and people take it the wrong way. But the reality is he doesn't know any better than you, me, and even Patrick.
And even me.
Like that's the reality of it. And I think that we take we hang on his every word and we jerk around stocks or bonds way too much based upon the fact of what he says. But he should just take a lesson from sorry, go ahead, buddy. Like
I was just gonna say, go ahead. And it's not just him. I feel like the Fed really just in general needs to get their shit together because when you have Williams talking right before he talks, and Williams is like gives the most batshit crazy like dovish speech I've ever heard in my life, and then like 3 days later the Fed chair is talking about being mid-cycle and like Can you guys?
Well, it's even worse than that because Williams gave the speech, and then I think the New York Fed had to come around right away and say, "Oh no, that was just theoretical or whatever."
Right?
They should all just shut up. Like
exactly.
Chase, I saw I think you're a millennial, so you wouldn't appreciate this. But back in my day, when the Fed did kind of changing interest rates, they did it by actually buying or selling T-bills and indicating it. That's how we could figure it out. They didn't do a press conference. They didn't even announce it. They just went into the open market and changed the rate. And then everyone had to go, well, I think they mean that this is going to now be their new rate. I think I am one. I should start a petition that we go back to that.
Best of luck.
No speeches. No speeches, because I think this is bullshit. I actually think their whole idea. No, honestly,
that sounds like somebody had lost money today.
No, that's not true. I did lose money today.
It's all bullshit.
I won't deny that, but I have long argued this that the Federal Reserve, their idea, and that somehow this forward guidance and communication is a good thing is bullshit. Like I really do believe it's bullshit. And I had
tell us how you really feel, Kev.
No, so I had some really smart guy tell me, "Oh no, it's caused inflation to be lower over time," and he sent me some crazy, DSGE economics paper, and I'm sure now I'm going to be inundated with all these economic guys telling me that no, this is a good thing. I don't care what they say, And interestingly enough, I believe that our central banker Patrick, Polos. I think he was the one who said that he should introduce some uncertainty into the decision. And he has been one of the only central bankers that has actually gone and done a policy that was not more than 50% baked in. Like gone against it. Yeah.
Yeah, you never see that.
Yeah. Like bullshit. If they think they know better, then don't let the market dictate where you should be.
Yeah, and if you think about Powell in December versus Powell now and everything that's happened, like he knew nothing in December, not to quote Kramer there, but he knew nothing in December. It's like, what is the point of forward guidance if you can't see forward anyways? Because obviously they couldn't.
Yeah. And not only that, now he's been neutered. Like Trump has turned him into like that guy on Game of Thrones that Ramsay's little guy or whatever. It's just like it is pathetic. It is absolutely terrible. So if you are neutered, then just admit it and just do whatever Trump says. Like, okay, and don't say anything. Just do it. Anyways, we're getting off topic. Let's not go there.
Anyway,
what else do you think, Chase? Like, I want to talk to you a little bit about MMT because I know you've been writing about it, and I think you have some really interesting things to say. What are your thoughts in terms of the longer term kind of changes that we're seeing in our economic kind of I don't know. I guess the epsilon theory guys calls the zeitgeist. Like, what are you seeing there, and what do you think the long run opportunities will be?
So starting with that last part there, the long run opportunities are definitely going to be in real assets versus financial assets. I think that to me that's clear. And Kirill Sokolov the other day on Real Vision said something that I thought it perfectly summed up how I feel about just viewing MMT as it's coming down. Is he said, everyone's calling all these new policies and stuff socialism. He's like, to me, it's just the cycle, and that's how I see it. Like, this is all just the cycle. This is how this works. This is how politics works this late in the long term cycle, and this is how economics works. So, yeah, we're out of room when it comes to rates, and that creates tons of room for fiscal policy. It creates room, if not in some ways, a need for actual inflation, because inflation is really difficult to create at this point in the cycle with all the debt. But it's not impossible.
Oh, I love what you just said. Thank you.
No. Actually, I think you shouldn't have interrupted him.
Oh, sorry.
Chase, finish what you're going to say. Inflation is difficult to create, but
if you go there fiscally, then you get it, and as you've made clear to, I think, over time, is Trump's already there. We're already starting it. People always treat MMT as like this thing that we're going to get to in 5 years, maybe, when we have a socialist president. But you look at the debt ceiling deal, like how much they're adding to the deficit. China's running a 10-12% fiscal deficit. We're running a 5%. And if you look at, you can actually chart the M1 to M0 ratio, like in the U.S. versus Europe. And the fact is, we're able to get money into the hands of spenders instead of just reserves, better than Europe, and it's helped the currency, and it's helped the economy, whether it was the tax cuts or whatever. The fact is, we put money into the real economy better than Europe. So we've been outgrowing them, and we've been getting the capital flows, and I just think that's going to continue. That's one of the reasons I am a dollar bull. Is I think the U.S. will beat pretty much everyone else to the punch with implementing MMT. And again, we're in an expansion right now with $1 trillion deficits. So, to me, MMT is already here. Yeah, it's in a light version, and it's just going to get bigger, but it's already happening. And that's why you and I, Kev, are on the same page that even cyclical inflation coming up in the next, call it, year, can surprise to the upside. I'm not saying we're going to get 3% inflation. I'm just saying higher than all the people expecting no inflation, and bidding bonds back to nothing. So I think MMT is inevitable. It's coming, and it's already here.
So Chase, you won't say it, but I'll say it. We're getting 3% next year. There you go. Chase, it's been a pleasure having you on. Thank you very much. Why don't you tell us, listen, for anyone that wants to, make sure you go subscribe to Chase's blog, and then think hard about subscribing and buying his product, because it's a terrific product. Really top-notch thinking from Chase. Why don't you tell us where they can find you and your great newsletter?
Yeah, Twitter at Pinecone Macro, and the website is pineconemacro.com. And as far as the research goes, there's a Pinecone Macro Research tab on the website, but people can email me or hit me up on Twitter, ask for a free sample. I'm happy to shoot anyone some of the stuff.
Great. Well, thanks a lot. Thanks for joining us today, Chase.
Thanks, Chase.
It's been great having someone in the same kind of mindset as me. I appreciate it.
Yeah, and Chase, you're always welcome back on the show if you have any great ideas to share.
Yep, sounds good.
Thanks for coming on.
Guys.
Yeah, cheers.
Thanks again, Chase.